Hey guys, it's me, Peter, and I want to talk to you guys about the coronavirus and how that will impact real estate. So the question is, should you buy knowing that the coronavirus will cause a recession? Now, the reality of the situation is the coronavirus will cause a recession. In fact, the recession is already here. The question is, will it cause a depression? A recession is typically 2 quarters of a negative GDP growth, and it's a natural contraction in a business cycle. Things have been going up and up and up, and it's time for a reset, as you would say. On the other hand, a depression is a bit more serious. A recession is typically about where we are, where we dropped about 30%. Now, during this video, it dropped around 30%. It may drop even more. But a depression is a bit more serious in that it's going to be about a 50% decline, and it's basically a prolonged recession, and that could last, the last time it happened to us, it was about 18 months. A recession can last about 6 months. After all of this coronavirus goes away, assuming that everyone did what they need to do to be careful and wear masks and whatnot, this could all be over within 6 months, and the economy can come back. But I'll keep you guys informed about where the market goes. This could very well just be a recession which could last 6 months and everything could blow over. Or it could go into a depression, which will be more serious. And I'll make sure to tell you guys as soon as the news breaks out. Now, before I start this video, I just want to say, I know I'm a realtor and I know that I'm talking about whether to buy or not. But please know that anybody who knows me knows that I am ethical and that I am truthful in whatever I say. I will tell you what I truly am convicted in. So please just note that before we start this video. Now let's get into it. A lot of people ask me, Peter, will the real estate market be affected by the coronavirus? And the answer is yes. It has affected demand because less people are out there right now. Open houses aren't allowed to be advertised. Plus, people are just scared of going out anywhere. They don't want to contract the virus. And also, people are afraid. Their Amazon stocks, their Boeing stocks, their Microsoft stocks have significantly dropped, so they have less down payment because they were going to cash out and use that as down payment. Plus, there will be further layoffs and businesses going out. There will be less demand. And that's not even getting into supply. However, there's so much pent-up demand right now that there's still multiple offers on most homes. No one really knows where the market will go. But again, let me just remind you that a stock market recession doesn't necessarily equate to a housing market recession. Will it affect the other? Yes, it will. However, it doesn't necessarily mean that our housing market will crash, especially in our area. We're very insulated, and I'll make sure to keep you guys apprised of what's happening with the real estate market before it actually starts happening and people start catching on. So please hit that subscribe button and hit that like button, and I'll keep you guys informed along the way. There are 2 parts to the answer of this question of whether you should buy or not. And the first part really deals with assuming that the market will drop. Let's just say it dropped 30%. Now, I don't believe we're going to have a 30-40% correction like we did the last time. That was an anomaly in that we gave out loans like it was candy. However, let's just say we knew that it was going to drop 30 to 40%. Should you still buy? And here's the answer to that question. A big factor that a lot of people are not noticing is interest rates. Keep in mind that even though housing prices drop, interest rates will go up. We are at 0% interest rate right now. And yes, we can go into the negative interest rate territory, but keep in mind that for those of you guys who have read the book by Ray Dalio, it's a great book. It's called How to Navigate the Big Debt Crisis. This book really outlines what will happen when we get into that territory. And most likely the Feds, seeing that it's making yes, we have to stimulate the economy, but it's going to make some real impacts to our financial system by doing this, and they're going to be forced, their hands are going to be forced to actually raise the rates. So interest rates actually can go, it can go in the short term lower, which is a great time. It's a great opportunity for you to get a mortgage, but it can also go much higher, and it probably will go higher to about 4 to 5. It could be 6-7% interest rates. And so even though prices are deflated, if interest rates go up, the amount that you are losing in just interest, we're talking hundreds of dollars. It could be, for most of you guys, it'll be about $400 to $500 in difference in payments, that even though the prices go down, which will eventually go up, interest rates will go up, and you probably won't see the opportunity of 3%, sub 3% interest rates again. In the long run, you're probably going to lose more in just the total interest payment over the home prices going down. Now, the second part is something that not a lot of people understand. And really, the question is it safer for you to own a home or for you to rent a home during economic recession and possible depression times? So real quick, I just want to let you guys know a little background about myself. I was a distressed property expert back in 2011, 12, 13, when there was a lot of short sales and people having to do loan modifications and people who were in foreclosure. What I learned is it's actually way safer for you to own a home than for you to rent in serious distress times. So let's take a worst case scenario type of situation for you. Let's just say your finances got decimated through this recession. All of your stocks went to near worthless and you lost your job and there's just been a lot of different bad circumstances that causes you to have no money in the bank account. In that situation, your landlord can technically evict you within 30 days. So in 30 days, you're gonna have nowhere to go. Also, please note that your landlords may be struggling as well. You may be making your payments, but because your landlord's kind of in a tough spot, they're gonna have to sell and then you're gonna have to move your family to a different rental, and that's definitely a big hassle and there's no safety factor in that. Conversely, let's say you ended up purchasing a home. Let's say you're owning your home and you're in the same situation, you've lost all your money, lost all your assets, and you can't make a payment. Keep in mind, and a lot of people don't understand this, is that you have 180 days before they can foreclose on you. And what's crazy is people don't realize that I have not, in my career of helping hundreds and hundreds and hundreds of people in their distress situation, I've seen one person get actually foreclosed on within the 180 days. Typically, it lasts a lot longer, and there's so many different options. When there is distress in the economy, the government tends to bring out different rules that are basically aids to homeowners. So there could be short sales. Short sales could take another 6 months to be able to negotiate and close, which that gives you a year to stay in the house. There's loan modifications, which I've seen people play around with the loan modification tool, and they've been in their homes for years, like 3 to 5 years. There's also principal reductions. They could actually reduce the principals, and there are some second mortgages that people have been able to completely get forgiven. So there's a lot of government assistance programs for homeowners. Now, please note that I am not a financial advisor, nor am I an attorney. And I'm not saying for you guys to all just not make your payments. I'm just letting you guys know that in those really distressed situations, that you do have a lot longer of a timeline in a home, 6 months to, for some people, 5 years in a home. And a lot of them actually didn't pay, and they were able to stay in their homes for quite a long time, and they were able to repair their credit within 2 to 3 years through different credit repair programs. Also, please note, and this is important, in the state of Washington, if the first lien holder, your mortgage holder, ends up foreclosing on your property, once they've taken over the property, keep in mind that they cannot pursue you any further. There's no other repercussions or consequences. Once they've taken the home, you're basically off the hook. But that's not necessarily true for a second mortgage. So for people who have HELOCs, or any other kind of junior lien holders, please be careful because they can pursue you after the first lien holder ends up getting paid. So in summary, the biggest point to remember is that you are safer owning a home than renting a home. If it's a really dire, desperate situation, you'll be in a much better spot if you owned a home rather than being able to be kicked out within 30 days. Secondly, remember that even though house prices go down, which it'll eventually bounce back up and it'll probably be stronger than it ever has because Seattle is such a hot spot, that interest rates could go up. And if interest rates go up, you're still gonna lose more money in just interest rates than just a housing price reduction. Lastly, please remember that we may not see a housing market correction at all at this point because there's so much demand and so many influx of people coming here for the many jobs that we have. We might not see that correction, and it may slow down, which I do believe it will. I believe supply will increase because people will be struggling and there may be layoffs, and also there will be fear, and demand will decrease. However, it's going to be a more even market. Maybe it's not the 1.5 months of inventory that we have right now. Maybe it's 3 months, 4 months. That'll be a more balanced market, and you might not see the house prices go that much lower than you think. So keep that in mind as you are looking at homes. I know this is a huge deal for you guys, so please feel free to ask me any questions. I am here to answer them, and I will give you honest answers, not just because I'm a realtor and I will get paid, but because I want you guys to make the best decision possible. If you like this video, please hit that like button. Feel free to share this with any of your clients, friends, or family, anybody who's on the fence of buying right now. And please remember this by Warren Buffett, that when people get greedy, get fearful. And when people get fearful, that's when you get greedy. In other words, buy. So I hope you like this video. Stay safe, guys, and I'll see you on the next video.